I want to say good morning to everybody. It's Tuesday, June 2nd. I'm Joe Campolo, along with my co-presenter, Peter Klein, and we have our guest this week, Joe Camberato, who's the president of National Business Capital and Services. And this is business unusual, right? These are not normal times. These are unusual times. And every week we're here to start talking about what's happening and what we can be doing to continue to prepare our businesses to move forward into this new economy. You know, every week the name business unusual lives up to itself. So in the past week, we've learned that the U.S. has more than 105,000 deaths from COVID. There has been systemic protesting and rioting going on in cities that has resulted in massive looting. Protesting the killing of George Floyd. And the Wall Street Journal today reported that the Congressional Budget Office, a nonpartisan group that tries to forecast the economy, does not see us getting full GDP recovery to where we were pre-COVID until 2029. So you got almost 10 years of recovery they're anticipating. And yet, Peter, I'm looking at CNBC and I'm seeing a market that's green again and up. And this market doesn't seem to be fazed by any of that. Unemployment at 40 million. What is going on? What is going on with this?
Yeah. Good morning, Joe, and Joe, and the rest of those who are listening in. Thank you for participating in this again. It is unusual. It is clearly unusual. But in unpacking this, we can sort of talk a little bit about the differences between Main Street, the economy, and the markets. Is it possible that the market, the S&P 500, remember there's different markets, right? And that's an important first step. While the S&P 500 may only be down 5 or 6% in this year of unbelievable things that are happening, and death and tragedy, and now rioting and protesting, but the equally weighted S&P 500 index is still down 14%. The value index is down 15%. International market, the average stock is down a lot more than what the S&P is showing you. So at the first thing, we need to look at what measurement tool we're using. Second thing is Main Street, and this is a question, it's rhetorical, and we can discuss it. Is Main Street and Wall Street aligned?
Well, it's really an important question, right? So my concern is always GDP growth, because goods and services, as a business lawyer, I'm representing companies that are having output. And Joe, from National Business Capital, over the last 10 years, you've funded more than $1 billion of funding to small businesses.
Yeah.
And that's really what's driven this last economic boom in terms of unemployment rates being low. So Joe, what are you seeing in your corner of the world right now in terms of businesses recovering and opening up?
Yeah, well, thanks for having me, Joe. And hello to everybody. I hope you're doing well through this craziness. You know, there's definitely a big disconnect. We were talking about it at the beginning, prior to hopping on live, that there's a huge disconnect between Main Street and Wall Street. And we deal with businesses all across the country. And some states, I mean, you have certain states where people are still going out to dinner, like things are normal. And but overall, you have a lot of these businesses that even if they are operating, they're not able to do it at full capacity. You have a lot of people that are still waiting to get back to work. And then on top of that, you have, all of the lenders. We have over 75 different lenders on our platform. I mean, most of them have paused. So like access to capital has been paused. A lot of them are funding or say that they're funding, but it's a needle in the haystack for everything's got to really line up with your business right now to get funding. And you have a lot of these business owners that have businesses and they just don't really know what to do or how to bring people back. And if you're a restaurant, you're only able to occupy at 50% capacity. And are you going to be able to be profitable? And I really think that this month and next month are really going to be telling as things open back up, and we'll be able to see, who's. I just think it's unclear of who's really going to be able to really get back to business, and then at what capacity. And something I was talking about recently on a different webinar was, momentum is something that probably people don't really ever think about or value as much. But when you really think about it, the momentum that we've had in the last 10 years and that all of our businesses have had and all the customers that I work with, there's just this amazing momentum. And that momentum stopped. And, if you think about it, getting momentum getting that momentum back is not an easy thing. It's just almost like, in a way, a lot of these businesses are almost like startups again, and you're restarting from almost zero.
So I think that's a really important point. I mean, consumer confidence seems to have bottomed out end of April, and it seems like it's starting to come back a little bit in May. It's still way down from where it was, but I agree with you, Joe. One of the things that I'm seeing across, and it's Long Island because that's my platform, is people saying, you know what, I need to rethink what I was doing pre-COVID. I need to rethink if I want to drive this business again and start it all up again. And I don't want to say that people are becoming lazy, but they certainly have lost the momentum and the drive that was out there trying to push this economy higher and higher and higher. And I don't know how that picks up again. It's a really great point. It's hard as a business leader to keep people motivated right now, when waves of bad news just keep coming out.
I do think, Joe, it's going to be a dimmer switch rather than just a simple light switch. I did a video on this just recently, and I believe the economy and the restart, because of the reasons we've said, are going to be more gradual, and yet the markets, I believe, and we could talk about why, are thinking it's going to be more V-shaped and a light switch. So I think that's a disconnect that investors should be concerned with. Hey, Joe Camberato, I wanted to ask you a question, if I could.
Sure.
How did the PPP program impact your business?
Well, it really was. It was challenging. We have SBA lenders on our platform. We shifted to it, and we processed a lot of applications. It wasn't really. We did it just to help our customers and small business owners, especially the ones that didn't have access or great banking relationships. But the reality is that a lot of people applied all over the place. So we didn't get to fund every application that came through the door. And then on top of that, it really didn't matter if you applied at a brand name bank or a community bank. Every single bank, no matter who you are, how big or small you are, everything was a bottleneck. So it definitely was a challenging process. We got some done, not as many as we would have liked to. And again, even if we got them all done, it wasn't something that, there was a lot of stuff to process, and the numbers are big, but again, it wasn't a moneymaker. And even if we got them all done, it wouldn't have been a moneymaker. It was more of just doing the right thing for small business owners and helping and utilizing our platform and process, for people to get access to it. So, and then that's kind of dying out. And I think what we're seeing now is that there's a supply issue on the lender side, and that's our supply. And then there's really a demand issue on the business owner side. So even if our lenders were willing to just lend right now, a lot of the customers that are calling in that do qualify, that maybe they were doing 100,000 a month in sales and now they're doing 80 or 50,000 because they pivoted or figured out, or they're working at half capacity, and there's not a lot of those out there. Even if someone can qualify for money right now, they're just not, they don't want to take on the debt or the payment because they're not exactly sure where things are headed or going. And they more just want to know, hey, what are my options in case I do need to borrow some money? So, there's this, I think everyone's in this like holding pattern right now, trying to figure out where are things going. And someone said something interesting to me on the phone the other day. And, you know, they were like, hey, my Amex bill is the lowest it's ever been, you know, and he wasn't bragging, but he made a good point. He said, until I see that bill starting to creep back up, then it's almost like if I'm not spending, then a lot of other people aren't spending. And if people aren't out there really spending, then the business owners that we work with, you're not really sure what to do. And, you know, people borrow money usually for opportunity or for a challenge. At this point, the challenge and the damage has in a way been done. You're not going to borrow money to get out of that because it's almost become so chaotic. And then opportunity, no one really knows exactly what or where the opportunity is just yet. So everyone's very, very cautious. That's what we're seeing.
Yeah, so a couple of things. I mean, we saw Congress, the House passed a bill to extend out PPP guidelines and time, which is important for forgiveness. But I think most people at this point, especially people that got the funding in round one, are probably exhausted those dollars and probably need more time to attribute to those dollars so they can be forgiven. That's really important. But another thing that is going to come up, and this is, you know, this is something that we started talking about and clients are starting to get concerned about with PPP and where cash is going to be needed, especially in Q3, Joe, is so when PPP gets forgiven, right, there's no expense on the P&L, which means companies are going to be showing these shadow profits that don't really exist, which means there's going to be higher taxes due on quarterly estimates down the road, but the companies don't have the money. They spent the money on PPP dollars, and they're not going to have that cash. And cash flow becomes, you know, very challenging. Combined with, you know, we have been getting calls from clients, good clients, big clients, who are getting their traditional lines of credit from their commercial lenders called because of material changes in their economic circumstances, right? So we're going to have this need for cash. And so, Peter, this is like the perfect storm that I'm worried about, right? Is so right now people have cash in their investment accounts because the market's doing well. So they can borrow against that or they can lever that somehow. If that goes down, though, they're going to lose that asset to lend against as well. And we're going to have a real cash crunch in the business world coming up. That's where I'm concerned for Q3 right now, is how are we handling all that? So, Peter, what are your thoughts? And then, Joe, I'd want to get yours as well.
Well, I agree with you fully, and I'm concerned about that as well, Joe. And although I do think if we came down to it, they would just print more money. I mean, just think about this. Think about, you know, when I drive home at night or when I'm just reflecting on the day, I say to myself, the United States government essentially just sent out checks to everybody, different amounts, and basically here it is. It's a definition of helicopter money. And of course, that's not, again, people need it. I'm not saying it's not a need. I'm just saying they put the printing presses on and they sent this money out. And they did that with unemployment and extra unemployment and all of this. And I'm sensitive to that. I'm sensitive to the need. But from an economist perspective, it's hard to square that circle. How do I square a circle that simply says governments are just giving away money? How does that work? Well, it works because they can. It increases debt, which you know at this level right now is untenable for our nation and for the globe. And so I guess my answer is, yeah, that's going to be a problem, but it'll probably be solved by just more stimulus in the third quarter, especially because it's an election year. If it wasn't an election year, a different scenario may occur. I don't know, but it'll be interesting.
Joe, what are your thoughts?
Well, I definitely agree with that in the election year. I think that can wind up helping everybody. So what Peter was saying, you know, I do hope there's been a lot of talks about extending out the PPP loan forgiveness terms and the tax issue that you were talking about, Joe. So I really do hope that does get rolled out. And I don't think that you should plan that it's going to. I think you should always plan for the worst and hope for the best in an environment like this. I do feel strongly that is going to happen and be rolled out. So I think that'll be very helpful. There's also some folks that haven't been able to bring their people back, so they're not going to meet those loan forgiveness requirements by the end of June. So I do hope they extend it. I mean, our lenders are slowly starting to dip their toe back in lending. and they're talking about the third, fourth, and then first quarter of next year. And a lot of them do have money on the sidelines that they want to get back to lending. They just want to see that their revenues are there. So I think we'll be able to provide access to capital. But it's all going to be what happens in June and July, and are businesses slowly getting back to business. If they're slowly getting back to business, then maybe if they would have qualified for 250,000 or $500,000 or $1 million, maybe it'll be 50 to 25% less than that, and then more of like an ongoing basis. But it really just depends on what happens here in June and July with people getting back to business. I mean, it's really simple. If as people get back to business, the lenders will be there to lend, including banks. But if that drags along and drags out, it's challenging. And then there's the one concern of mine is a second wave. What would that look like?
Yeah, I think that does the market in. I think a second wave does the market in.
Yeah. Although we probably
let's talk about cash flow management, Joe, a little bit, right? Because I think so I'll just tell you from my perspective, right? We've made whatever adjustments we need to make, and our marker right now is September 1, right? My anticipation, my expectation is we're going to sort of slog through the summer the way it is. There's not going to be a lot of consumer confidence. There's not going to be a lot of tolerance to take on more debt until people see what's going to happen in the fall. I could be right or wrong, but that's sort of what I'm betting on right now. Right, and so we have a 3-month budget in place to get us to September 1, but things don't pick up come September 1, and tax bills come due, and all these other expenses come due, and PPP is long gone, and forgiveness periods are long gone. What can we be doing now to help sort of prepare for a cash flow for Q4 at this point?
Well, I think you need to continue to be tight and lean as possible, and that's no secret. Are there any areas where you can reduce or get rid of any type of reoccurring bills? You definitely need to look out. Sometimes you forget about that. Everyone's business is different, but sometimes you have the, tech reoccurring bills and things like that hit you a month or two from now that maybe you forgot about. So really be looking out at what bills are coming due and see if you can negotiate with those vendors, push things off. I mean, anywhere that you can negotiate and push out any type of, bills that are coming due, whether it's vendors, rent, or whatever it would be, I would take advantage of anything that you can right now. Even if you're optimistic, I think be extremely safe, and hope, but hope for the best. I also think, depending on what business you're in, are there any areas of opportunity? I mean, there's all this doom and gloom now. I believe that in the worst of economies, there's always opportunity, but you're going to have to really search and find it. Is there, I don't know, there's probably all different people on this call in all different industries. Is there any area of opportunity that you can generate anything? And, you kind of have to get out of the mindset of, where we were in this economy last year, where you're like, what, that's not worth my time, to go and do that, but right now, maybe it is, and bringing in any type of revenue into your business is better than zero. If you're able to do it on a smaller scale and not have to bring back, a ton of staff to do something. But is there something maybe you're missing? Is there an area where you could generate anything, in your business, and maybe you have to do it in a different way? But I do think that right now you have to get out of, we've always, that mindset of like, oh, we've always done it this way, because all that goes out the window right now. And you might have to do things that maybe you don't like, or completely things that you never thought of, but you got to get, I think, creative in an environment like this, and hold on to as much cash as possible, reduce anywhere you can, and seek out things that maybe things that you never thought that you'd be doing in your business. So I don't know what those answers are, and there's all different industries, but I think you're really going to sit back and think and get strategic and creative.
I have a question, Joe, if I can. So you're the only one here between Joe Campolo and I whose business is, more sort of around the country. And Is it possible that we're looking at things from a Long Island, New York City centric lens? From what you said from the beginning, you said that in the beginning of this program, you said that your clients around the country are having a different experience for the last 2 months. I'm wondering, can you give us a sense on, the rest of the country, let's call it New York, tri-state, are they indeed up and running, and to what point? I mean, is it 80%? Is it 50%? Let's call the tri-state area at best 50% of its typical business right now. Maybe it was probably less than that a month
Yeah,
ago.
it's been less. Yeah.
Where's the rest of the country? And are we just looking at things from a tri-state lens?
It's actually a really good question, Peter, and that's what that's what we've been trying to figure out. Some of these states that haven't had a lot of cases are kind of looking at New York like what almost like what are you talking about? But then there's businesses in other states that their business they do business from maybe supplier, they get their supplies and things like that from other states, so then they're affected and can't get access to certain things. But certain businesses in certain states are still buzzing along, and they're not really understanding what we're talking about. And then you have other states that have been really affected where it's kind of the same type of mentality. So it is really interesting. I mean,
maybe city versus rural too. It may be one of those kinds of things.
Yep, I have some friends that live in Florida, and they say, hey, we went out to dinner over the weekend, and there was a 45-minute wait. Like we're not experiencing that here. So it's a little strange. But then you have, and it's very spotty and like industry specific. Like even here you have a lot of the trade businesses, contractor trades, landscaping businesses, things like that are extremely busy right now. So it's very, very mixed. It's very hard to really put a finger on. And it really just, I think, depends on, it really also depends on the industry that you're in too. But regardless, even if you are doing, still doing revenue through this, and you're in another state, and you've been outside of, what we've experienced here with cases and unfortunately death, people are still concerned about what's going to really happen with the economy. And again, even if those people are doing business, they're not really considering, and my business is tied, like our business is lending, and we lend, and that's how we generate revenue and income. Even if they're in another state that haven't experienced this, like I was saying, and they're still doing business, they're not thinking about, borrowing money to grow right now. They're being, kind of holding on to any dollar that they make and being extremely conservative, because look at what's, even if you're in a state, you're not experiencing COVID, you're still reading probably the same news that we are. And then you have so many people working remote that even, a lot of people might work in a rural area, but they're working remote now, and they've been, furloughed or laid off. So everyone's being super conservative, and that's just that's what we're seeing.
Yep. So let me. I got a couple of questions about PPP. One I want to address. So somebody was asking when we were talking before about the potential tax problem that PPP caused. I want to just make sure that people understand sort of the scenario I face. So as a law firm and any professional services firm, employee salaries are the largest expense that we incur. And like most businesses out there, Q1 for us was tremendous. It really was a great start. We thought this was going to be a tremendous year. So we had a great first quarter. The estimated tax payments for Q1 got pushed as part of the stimulus package relief and everything else. And now through Q2, because of PPP dollars, our biggest expense, which is salaries, is no longer an expense on the P&L. So here we have ostensibly on paper a business that's very profitable right now. And come June 30, 2 quarters of estimated taxes are going to be paid, right? Because I don't get to expense out salaries with PPP dollars. And that becomes very problematic. So we're looking at how Treasury's going to handle that. That is something I know they're talking about and discussing. But for us, and for many firms out there, it's going to be an issue where we have to come up with that cash to pay those taxes, right? But we also got to come up with cash to get through Q3, and it becomes incredibly challenging. So that's what I was referring to before about the problematic with having to pay quarterly estimated taxes. It's totally going to be totally askew because of PPP dollars not being able to deduct salaries. Our June 30 P&L is going to be totally askew as to what the end of the year is really going to look like. So how do you even estimate what to pay in terms of taxes? Peter, so investment-wise, right? A lot of people want to know, because everybody's holding on to cash right now, and a lot of people want to know what are the things I should be looking at to put my money? Should I just be sticking it in my mattress? Should I be putting it in a money market? What are you suggesting, industry-wide?
Well, what we've been doing at Aligned Wealth is trying to figure out what are the sectors and companies and themes that are going to be drivers to take our clients to the promised land of, above, growth in their portfolios. So we're taking a very balanced approach. Cash is essentially, as you know, no real return on cash, and there's really very little you can do outside of cash without inordinate amount of risks, which we don't subscribe to. So for the most part, our clients are balanced between select equities and select themes like cybersecurity, defense, healthcare, genomics. We like very much the idea of infrastructure, great businesses that are involved there. So we're focusing on those. We are purposely avoiding the leisure to travel, the airlines kind of sectors, thinking that they very well may be in for some more pain, or at least there may be structural issues that'll take some time for that to get back. And this notion of being patient and waiting to deploy capital at opportune times, at when there's good values to be seen, I think is what a good active portfolio manager, financial advisor should be doing today for their clients.
Yeah, and I'm getting comments about PPP and the taxability of the proceeds, and I agree with the comments we're getting that Congress has to sort this all out. I mean, some of the proposals that the House passed, extending the expense forgiveness period, reducing the 75% payroll, all of that has to happen, or else the spirit of PPP, is lost. And I agree that I'm hoping that tax burden is going to be relieved from small businesses as well, because otherwise the spirit is lost. The challenge, and this again is why it's so remarkable to me that the market's holding, is the challenge is nobody has any answers right now. We're hoping and we're guessing and we're praying and we have fingers crossed, right? But but it's very difficult. So we're getting ready to go into phase 2, we hope, here in New York, which is good. Joe, the industries that are open, though, landscaping, construction, prior to COVID, were those industries that were typically looking to you for capital and loans, or were they not?
No, they were, especially a lot of the contractors. They would use a credit line from us or one of our different funding programs to take on more jobs. So right now, they're just doing whatever job they can. They're not really looking to get aggressive and take on a ton of work. But yeah, prior to this, I mean, a big portion of our business, we work with a lot of the contractor trades, and were having jobs thrown at them left and right. So they would instead of being only able to do, let's just say 5 jobs at once, if they could get their hands on, X, Y, and Z amount of money, they can maybe do 8 jobs at once, hire more staff, buy more materials, and be able to, get more jobs done in a quarter or a year, or what have you. And right now, no one's really getting aggressive like that. They also have like a backlog of work that they're trying to wrap up old jobs, and I think are concerned to take on really too many new jobs.
Yeah, and this issue of being afraid to get growth centric, or to get going again, is worrisome, because that is what the economy A, needs, and B, what the market is expecting. And so if we do not get that liftoff, if that liftoff is fails, so to speak, if it doesn't progress, I'd be concerned for. And again, that speaks right to that Wall Street Journal article, Joe, as you mentioned from the beginning of the show. About 10 years to get back to GDP of 2019. Well, that's a long time, and so these are the things that we have to be concerned about, especially for the small businesses that, Joe, you deal with, because those are the ones that are the lifeblood of our economy.
Like 90% of the whole country, and the Wall Street, that article really just kind of ties back to the momentum. I mean, the momentum, no one ever planned in their business. People planned that, hey, maybe there'll be a recession, things will slow. No one planned on things halting. And there's so many, to what you were saying before, Campolo, is there are so many things out there. Everyone has their guesstimates and ideas, but no one really knows. It's a day by day, week by week thing. And I just believe that the only thing that's going to change and pick that momentum back up, I think just comes down to one thing, and it's people being confident and comfortable with getting back out in the world, and whether they just get over, the virus, and just say, I'm confident, and I don't know if I'm buying into it anymore, or there's a medicine, a drug, a vaccine, or whatever. But until there's that confidence that for people to get back out, even like you think about schools, they're not even sure if they're gonna have kids come back in September. But how many families in this country, both parents work today, and school is in a form of daycare, so they can go back to their job. So that's like a whole nother big issue. So I'm really hoping that there's some sort of confidence or something that causes that change. Because if there's not that confidence and people aren't comfortable to get out of their houses, then and do things, it's just gonna drag out.
Yeah, I mean, one of my concerns, and hopefully this will lift maybe next year, is interest rates are so low right now, but I still think everybody is just too afraid to borrow money, too afraid to go into debt, too afraid to be committing to personal guarantees, and that's going to really stagnate a lot of the markets right now because nobody has any certainty. Nobody has any certainty. So why am I going to jeopardize my personal assets at this point? As we continue to move forward. And for small businesses, that's all we have, right? We don't get the luxury of not signing personal guarantees and not securing debt. If we're not going to do it, how are we able to grow, grow through it? And that's where I get a little more nervous than most, because a year ago, all of us were like, yep, take on debt, take on space. I'm investing in my business. This thing is churning like a fine machine. Having now been ground to a halt. Joe, some other things. So I know you guys have like National Business Services, and you're able to help out with like credit card fees and everything else. What are other things that small businesses can really be looking at to help drive down fixed costs?
I mean, all of your typical, your credit card processing. I mean, payroll is, a big one, but, right now you're not doing a lot of payroll. Those fees are down. Insurance, and just any of your other, expenses. A lot of those, you have time now. It's worth looking into, can I, a lot of times people won't do anything. It's like, oh, I don't want to take up the time to save, $500 or $1,000 or $2,000 a year on my insurance. But if you look at all of your big expenses and you can reduce $500 here, $1,000 there, a few thousand here, collectively, if you add that all together, it could be a pretty big savings. We were able to save someone recent like $20,000 a year in fees between like 3 different services. It's just found money, So I think when, I think you have to get, again, out of that growth mindset. When things are great and you're making money in your business and rocking and rolling, it's very easy to, I'm not even going to bother taking the time to put into that. I can just put it into, taking on another job or making more money. But if you've got time now, you got to do the work and spend some time and try and reduce costs in every type of real bill that you have in your business. So, you know, you got to just change your mindset, I think, you know, with that.
Hey, Joe Campolo, do you expect that this environment would be fuel for further M&A activity later this year, early next?
Yeah, so one of the things that we're betting on is that M&A activity is going to be up, but the question is valuation, right? So there's a lot of capital on the sidelines right now that are looking to get into the M&A market. And there's a lot of anger and fatigue with business owners who just want to sell their businesses. And so the trick is going to be, you know, how tight do those companies want to hold on to that cash before they make the acquisition, and how low are they going to drive down valuations, right? And it's going to be very interesting, difficult times. I'll tell you, it's I have some clients who took a pass on selling their business last year because they expected this year to be better and the value to be higher, and that probably wasn't a good decision for them to have made. But hindsight is 2020. So the question is going to be, do they hold on to it for a few more years now, and try and get a better value, right? Or is this just going to, you know, to really be a plateau where we're just not going to see business values go up? So again, it's an unanswered question, but it's a great point. I can tell you that the clients I deal with right now are tired. They're burnt out. And if they could get a deal to sell their business, I bet a lot of them would in a heartbeat right now.
And the question, of course, is multiples, right? It's this environment now where you're working so much harder, so much uncertainty. You'd have to think that multiples would have to compress a bit.
Yeah, and the shame is the forecast, especially, and that's why it's kind of so significant to see what the GDP predictions are for a 10-year ramp up to get back. That's always going to factor into what people's future forecasts are from an investor's perspective, right? Oh, you're going to outpace the GDP, why and how? And so now values are going to be set at today's market, and it's just going to be a difficult time. From my perspective, people got to get moving. We got to get moving. I think, Joe, you mentioned the word momentum before.
Yeah.
We don't have it. We don't have it. It's gone, and it's up to us as business leaders and business owners to get that momentum going again. And I tell you, it's hard, right? You come into your office, it's empty, your phones aren't ringing. It's very hard, but we gotta find ways, because it's inertia, right? A body at motion tends to stay at motion, and a body at rest tends to stay at rest. We got to get people's mindsets back to production and accomplishment and achieving and wealth building. And it's
the scary headlines of the last few days doesn't do much help in that regard.
Well, the media is very, very difficult to comprehend and to ignore. You know, you can't ignore it, but it's very hard to digest too much of it. You got to find a good, healthy balance there somehow, I think, and just focus on fact-based publications and not, you know, not propaganda or people with agendas. It's really very exhausting. So, Joe, what are you doing? You know, you guys are watching and waiting, just like many of us, right? You're waiting for the lending market to take up. So, what are you doing now to remain sharp and productive?
You know, I've definitely been focusing on keeping myself in a positive mindset, and exercise absolutely helps with that. And then just paying attention to what's going on, you know, constantly doing phone calls with our lending partners, and different business owners that I know in all parts of the country. I'm involved in some different business networks like YPO and a few others, and just trying to get a pulse on what's going on to try and make the best decisions that we can on what our ramp up looks like and the best way to go about it. And
what are the things you're looking at, though? So what are the things, if you see these things happen, you would feel confident in relaunching and reinvesting in the business? What are the metrics you're looking at?
Well, the biggest thing is just the gauge of people, you know, consumers, people getting back out into the world. I think that's number one for all of us, you know. And then I'm speaking to different business owners in different states and different industries, just to get a pulse and understand like what's happening there. What are you seeing? And just to, you know, I have that privilege of being able to, we have clients all across the country, and just understanding these different, like what industries are busy, what industries aren't, and if they aren't, why. You know, so I've been doing that, you know, that's what I've been really doing weekly. But until there's confidence from consumers, there won't be confidence in my business owner, you know, the business owners, and there won't be confidence in the lenders. So, you know, the good news is this month, a lot of lenders are saying that they want to dip their toes back in, and some of them are beginning to fund to the right companies. It's really good, positive to see and hear. But I think what Peter was saying earlier is it's going to be, you know, a dimmer switch, and I think slow and steady. I don't think it's going to be a light switch and we're just all going to be back and, you know, busy. I think the one thing that's keeping me motivated, and I think it should keep everyone motivated, is we're all dealing with this. You know, it's not like I made a bad decision in my business and screwed it up, so to speak. And we're all dealing with this. So we're dealing with this. Our competition's dealing with this. And it's really important that I think you keep in a positive place. You're really not going to be able to project that. Like, there's no projections right now. There's nothing to project. It's a day by day, week by week thing. You got to keep yourself fresh, relevant, and motivated. So when it does, you know, start to turn, you can be in, you know, you can be there and be, you know, first to market, so to speak. I don't really know what more you can do. And, you know, usually in or at least I started the company, you know, started getting going in 2007. So we built the business through 2008 and 2009, which was scary and challenging. That was it was a lot more industry specific, and things slowed down, not stopped. So a lot of people jumped from, you know, one business to another. But really right now, I mean, there's not really where you jumping to, you know? So I think that you kind of just have to hold on and hang tight and fight through it. I don't really know what else, you know, you can do in any industry that you're going to get into now, outside of like PPE masks. I mean, what really, and maybe printing gun shells. I don't really know where you really, what are you really jumping into? And even if there is opportunity, it's going to take time and you know, time and money. So I think you just
that begs the momentum question too, right? I mean, we as business owners need to keep moving. You guys call it a dimmer switch. I call it being stuck in the mud, right? We're stuck in the mud, and the challenging thing is holding on to cash, right? Cash has to be king. You have to have cash when these opportunities open up. And that's the balance, is how much am I investing right now today in my business to get what sort of return? It's very complicated stuff. Peter, what are the indicators you're looking for when you would feel better about the market? Now, I know you never feel good about the market, but what would make you feel better about the market right now?
I felt very good about the market in January of 19. To me, it all comes down to what you pay when you enter into a transaction. That has been shown in study after study going back 100 years to be the most important determinant of investment success. It's not who's in the White House or what interest rates are or what earnings growth might be or this or that. Those are all forecasts. You don't know that. The only knowable is what you're paying, what multiple you're paying today. And today, those multiples are as high as they've ever been, coupled with uncertainty. So you can see as a fiduciary, someone whose responsibility it is to protect and grow and to make sure it's there for my clients. You know, I'm not a gunslinger. My job is not to make the most money. My job is to keep people in good stead and to compound over time. So clearly I'm concerned about the current levels. With that said, it's a market of stocks and a market of investments. There's always a special situation. There's always something that's forgotten or misunderstood. So we're constantly searching for those special situations, those diamonds in the rough. But for the most part, Joe, I think it's good counsel to suggest caution and a balanced approach in here.
Yeah, for me, the biggest thing is if this thing's going to flare up again in the fall slash winter. I mean, my risk tolerance. I'm an aggressive guy. I've always bet on the future. I've always invested in people. But we're gonna have a nasty problem if this thing, flares up. So I'm looking at all the other countries that sort of went through this before we did to see where it's all headed, right? But I think if we can get into the fall, and that's why, for me, we put together sort of this 3-month budget to get us to September 1st, because I think by then we'll see what's going on in China, we'll see what's going on in Spain, Italy, South Korea, all the other countries that sort of predated us on this, and that'll increase my tolerance to want to reinvest and grow. Of course, consumer spending. I mean, revenue is down because people aren't spending money on legal things right now. They're just not. The courts were closed for 2.5 months, so it's very difficult to gauge. So. Yep.
The other thing, Joe, I just want to throw in there, the other thing is, let's not forget, this is a global pandemic, right? And so we have other supply chain issues, we have other customers, we have other demographics and other markets to contend with. So it's not just the United States. Europe is in a bad way, and certainly it's going to take them some time to get Asia, which has been a powerhouse for so many decades. They're just coming out of it. So it's a lot of moving parts here.
So a question came up, Peter. Are you encouraging more cash versus stock allocation right now?
Hey, I'm more in a balanced camp. We're like a 50-50 kind of thing. I don't really see much in the way of opportunities in the fixed income market at these current levels. So I've been using cash as an alternative for fixed income, because you're not getting really paid for fixed income really that much anyway. So, and cash is as you say, king, and I agree. And it gives you optionality. With respect to the equity allocation, I have a fair amount of gold, which I would call an alternative. And I said, yes, that is an opportunity given the macroeconomic setup that we're currently embarking in, which is the printing of capital.
Yep. Joe, final thoughts?
I think don't, get wrapped up in a lot of the stuff that's out there. I think it's a day-by-day, week-by-week thing. It's going to be, you can't look out too far and try and make, decisions based on that. I don't think, you asked me, like, what am I looking at for key indicators? I think we're all going to know when things are getting back to it. It's not like I'm going to be looking at something special. I'm just going to see confidence in business owners and people, consumers being confident in getting back out there. And I think when that happens, we're all going to feel it and see it together, and try and stay positive. Again, your competition is going through this as well. And the person that, the people that fight through this and keep themselves positive, I'm hoping that the other side of this is going to be massive opportunity.
Yep. Peter, final thoughts?
Well, first, I want to thank you all. Thanks for being here, Joe. I want to thank you for all the work that you do for your small business clients right now, being a hand holder and a counselor, and being there for them. Both Joes it's critical, and I know they do that for individuals all the time. I guess my final thoughts are: be safe out there. Let's not just think this is a blip. Let's be mindful to what it means going forward, both economically and in business, and of course in healthcare.
Yeah, so and last question that came up is PPP funds are still available. They are still funding them, Joe Camberato, is that correct?
They are. The lender that we work with has stopped taking applications. They just have so many. But they are. If you want to reach out to me directly, you can find me on LinkedIn. Joe Camberato. Just shoot me a private message, and maybe I can get you connected with one of the local banks here and see if we can help you out.
That's great. So that's great. I want to thank everyone. So upcoming guests, we're going to have Rich Human from H2M to talk about infrastructure spending to stimulate the economy. We're going to have Jim Coughlin from TriTech to talk about commercial real estate development. We're going to have John Miller from the Guide Dog Foundation and Terry Alessi Maselli from the HIA to talk about how not-for-profits are muscling their way through this. Those are some of the upcoming guests we're going to have to talk about it. It's business unusual. It's unusual times, folks. You know, we're really trying to help everyone figure this out and figure it out ourselves. So here on Long Island, we can stay safe and stay strong. So we'll see you next week, and everybody just stay safe out there.
Thank you.
Thank you, Joe. Thank you, everyone, for joining.
Thanks, guys.